emerging market breakup really underway? Joining me to share his outlook for some EM currencies after their recent rout is Guillaume Salomon. Guillaume, in recent weeks we've seen EM sell-off causing currencies to plummet, even despite the best efforts of some central banks. Could you tell us your take on the rout this time round though? Are we seeing a bit of discrimination this time?
Well, the rout really started on the 23rd of May when the Fed shifted its stance and started talking about QE tapering. And ever since that, we've seen emerging markets come under some pressure. However, we've seen a drastic change, I have to say, the last 2 or 3 weeks. And I think there is a discrimination taking place in the market, and that is, there is a differentiation taking place between those countries with large current account deficits that tends to be financed by portfolio flows, and those countries that have got either surpluses or a flat picture in terms of deficit, and that do not require portfolio flows so much. And that's what you see in the last 2 or 3 weeks. And so the currencies that have been impacted the most have been South Africa, we've talked about it many times before, Turkey. But obviously in Asia, we've seen a massive pressure on Indonesia and India. And those are the countries that have suffered the most in terms of currencies. And I have to say that for now, the outlook is not very good at all.
The months-long rout was exacerbated on Tuesday by jitters over a prospect of a US military strike in Syria. Countries such as Turkey and India, who depend on short-term money, are particularly vulnerable. But what is your outlook for these two currencies against the dollar moving forward?
First of all, the reason why a strike on Syria is having a direct impact on the emerging markets that we've just talked about is obviously at times of uncertainty you tend to see a bid for what you would call safe currencies or G7 currencies, liquid currencies such as the dollar, the euro, and hence it leads to further undermining of the emerging markets. But also remember that those countries with large current accounts, when you've got oil prices spiking as much as they have recently, it just adds to this deficit picture, which is another negative for those currencies. So now going forward, well, the only central bank that has really been trying to stabilize its currency actively, one would say, has been Turkey. And they've hiked a couple of times the overnight rate, yet more recently they've been making more mixed comments about it, saying that they've done enough in terms of rate hikes, which was a tiny bit disappointing. So Turkey has been the only real central bank taking aggressive measures to try to stabilize the currency. We've seen India trying to implement some measures, but it's not worked so far. On that basis, I think we're going to see more pressures. So now in terms of levels, well, if you look at India, there are a couple of big psychological levels coming up. I mean, 70 is really just around the corner. I have a feeling that we're going to go beyond that. If you look at the round, where we traded 10.50 overnight, I think it's going to be touched again, and I think we will go much beyond that. The particular problem for the round is that the central bank seems to be happy with currency weakness. So I think eventually we will see dollar round all the way up to 10.80.11 to the dollar. So quite a bit more weakness to come. In terms of Turkey, I think it's going to be a grind lower, a gradual grind lower. I think eventually they will have to hike the overnight rate. Indonesia, similar picture to India. I think we are going to see more currency weakness in times ahead. So in general, I still like defensive positioning. I've liked them for some time. And I think it's going to be particularly tough here given the mix of Syrian uncertainty regarding the strike in Syria. We've got non-farm payrolls coming up next week, and then we've got the Fed meeting of the September 19th. So all in all, I think we're going to see definitely emerging markets under more pressure.
As we mentioned, Mexico and South Korea, which were the locus of the past emerging market meltdowns, have been relatively unscathed this time round. Could you finish off your forecast by telling us whether you maintain a bullish outlook for the Mexican peso against the dollar?
I think it is this differentiation that is taking place in the market that largely explains why even the zloty has not been touched very much, or other currencies such as the Romanian leu. And you mentioned Mexico and Korea. I think the market has really been concentrating on this in these couple of currencies, really 4 currencies in the world, where the fundamental is definitely not favorable. So on a medium-term basis, you could almost paint a picture where some currencies you could go long against other emerging market currencies that will suffer most. So stuff like maybe Mexico, but stuff like the ruble against the ZAR, for example, long the ruble against the ZAR, I think makes quite a bit of sense on the medium-term basis, simply because I think the market will keep concentrating on INR, IDR, South Africa, and Turkey.
Well, viewers, that's all from Guillaume and myself. Click back to the website for many more exclusive interviews, but for now, goodbye.